afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Saturday, November the 10th, 2012, and here is this week's weekend review. I want to first start by taking a look to see how the indices and some key sectors closed on a percentage basis to close out the week here. You can see here we have some nice movers to the downside and to the top side as volatility is picking up, and that's what we want to see as intraday day traders to give us opportunities for entries for some shorts and some longs. So in any case, let's take a look to see how they closed. The Nasdaq closed down 3.16%. Russell closed down 2.99%. The Dow Jones closed down 2.27%. The S&P 500 closed down 2.64%. The crude oil closed up 0.33%. GLD gold closed up 2.81%. The what's this right here? The copper closed down 1.21%. The oil index closed down 2.56%. The banks closed down 3.64%. The worst sector this week, and volatility was up 1.03%. So across the board, you can see here there's a lot of money flow that's starting to come out to the market. Some is coming into some's going into the gold stocks. I don't have the TLT up here, so we could take a look at that as well, so we can see how the TLT closed. But let's go ahead and get into the charts here. I want to first start by taking a look at this quarterly chart. If you guys have been watching my past couple videos, you guys know I've been keeping you guys in tune with this chart. If you guys want to know what this chart is a quarterly chart of the SPX cash index. So basically every 3 months represents a candlestick, right? We talked about, before we came into this month here, we talked about how we had a breakout, all right, last quarter, all right? We had a breakout over the prior 2 quarters of last quarter, if I could say that, all right? And that was right here. So we had the breakout. We were looking for that follow through. All right, but obviously October started off on a bad note, and November is continuing on that note. And therefore, what does this look like? This looks like a failed breakout. Remember, this is 6 months, right? So 6 months we were having trouble right here, and then we broke out, and then we came right back in. So as long as we can hold below this 1408 level, and then we hold below 1400, expect us to come back down here towards the 1360, 1362, maybe 1350 area. Now, how do I interpret this chart? Well, I interpret this chart that ever since companies report on a quarterly basis, I interpret this chart as a lot of people are expecting them to, have a nice fourth quarter, as well as we had this little breakout. But what happened? A lot of companies started coming out and saying that they were lowering their guidance. Companies came out missing their earnings. So therefore, it looks like we have a fake breakout here, and the market does not look good, obviously, as we see on the regular chart. So let's go ahead and take a look at the regular charts here. And I want to first start by taking a look at the SPY. And I have some key levels highlighted here from the SPY, but I'm going to get rid of these and just show you guys, so clean up the chart a little bit here. You can see the SPY broke this little downward channel, guys. This is a daily chart. So let me go ahead and start with the monthly chart first. Sorry about that. Take a look at the monthly chart. All right, we had a little sell signal now that we broke below February's low, and we broke below September's low. All right, that level was around the 140.20 area or so, and now we're currently at 138.16 on the SPY. You can see we're currently trading below the 8-day simple and exponential moving average on the monthly chart, which is around the 138.65 level. Okay, so that's a little short-term moving average on the monthly time frame to keep into perspective here. Now, if we take a look at the weekly, all right, we're coming into a key level around this 137. Okay, why is that a key level? Well, because if you take a look at last year, that was the high of the year, that 137 level before we got rejected. Then we broke above it this year, tried to hang above it, but we were not able to hold above it. Trapped some longs for whoever got long the S&P, the SPY above 137, shook those people out. All right, shook those investors out, and they brought it right back up. We got back above 137, and we were off to the races again. Then we're right back down since we were unable to hold above this little 144 consolidation. Trapped some longs up there. So this is basically, going to be an area where, if we don't hold, we're going to get some selling pressure, and we could get some serious selling pressure. Okay, the 50-day simple moving average on the weekly chart is around 136.75. Use that as a reference level. Use 137 as a reference level. All right, but if we start breaking below 136.75, 136, we're going to be looking for a move down towards 134, maybe down towards 132 on the SPY. But first of all, the key level that we're going to be watching going into next week is going to be 137, 136.75. To the top side, you want to see if we can get back above 140. If we get back above 140, then you want to be watching the 140, 150 area, 142. Let's take a look at the daily chart. See what the daily chart is telling us. Well, the daily chart is telling us that we have been getting some selling pressure, that we traps. Well, not that we trap, but everybody that was trying to buy against this, against this little bottom support channel, that did work out for a little bit, but then it's right back down. Now we're below it. Okay, so that's not good. So really can't look to get bullish this market until we get back above this key trend line until we get back above this key level from the trend line around the 140, and then obviously this little just horizontal resistance trend line now, which was prior support, so it's going to act as resistance now around the 141 level. You can also see that we're right here at the 200-day simple moving average. We got a bounce on Friday, a little short squeeze rally for people covering the shorts that happened on the ES. People started actually covering the shorts Friday morning, like around 8:15. That continued into the afternoon session around 12:45, and then after that, they just started fading the market back. And you guys can see the midday market update that we have on the website, wallstreettrading.com. In the My Wall Street TV tab on the upper right hand side, you can see all of the archive videos that we have done up to date. All right, so the SPY looks to go lower until we get above 140, 141. I'm not really looking to get long this market. You're going to have some cute longs here and there, but most likely until we get back above those key levels, any rally is most likely probably going to be short the rally mode right now, not buy the dip mode. All right, like we were by the dip mode when this uptrend. Remember now that we're in a downtrend, it's most likely going to be a sell the rally mode. So we'll keep you guys up to date with that. Let's take a look at the triple Qs now. All right, triple Qs. Let's take a look at the monthly chart. Triple Qs got rejected from that 50% Fibonacci level from the tech bubble sell-off. That was around 70.58. Now you see that we're selling off. We broke below the low of October. We're obviously below the low of September. We're also below the low of August, and we're below the opening price of July and June. Okay, so I mean, when we had this little breakout over the June highs where a lot of people got long, we're back below that breakout level. So anybody that bought most of the average tech stock back in June, if they're still holding, if they're still holding, they're not in a winning position right now. At the same time, you want to be paying close attention to this little rising upward channel that we have here on the monthly time frame. As you guys know, these upward channels usually result to the downside. And if this was to result to the downside on this monthly time frame, it could get real ugly. However, we do have some nice support down here, so the world is not over yet. We do have some nice support on the triple Qs around the $60 level, also around the 61.20, 61.34 level on this monthly chart. Let's take a look at the weekly chart. All right, and resistance is that key level that we're watching, 66. Let's take a look at the weekly chart. And the weekly chart kind of tells us a different story. The weekly chart tells us we have some nice, strong support around the 60 level. Why? Because last year, we consolidated in this big range between 50 and 60, $10 range here. We broke out, came back test held, we rallied right back up. Right now, we're going to see if we could come back down. Now, I see a couple of guys out there on the blog, in the blogosphere, saying this could be a head and shoulders pattern. All right, that very well could be in the $60 level, could be the neckline. All right, we can't say that yet. It's really too early to say that. It's very early to be calling that, but one thing that I'm watching for next week is if we continue to see some selling pressure, I'm going to be watching this key trend line that's going to be coming in here around the $62 level on the Qs. Why? Because that comes from this little key inflection points that we had right here before we broke out. All right, this is going to be kind of like a little official back test if we were to continue selling and hit that level. I do think there would be some scalp opportunities around there. That's why I'm not really looking to push any shorts right now, and I'm trading very quick and conservative right now on most of my trades. I'm leaving a lot of money on the table as well, but I'm not going to get caught in any snapback rally if there was to be one. All right, now let's take a look at the daily chart of the Qs. You can see here we have some support around 63. Okay, but at the same time, the major level you want to be watching is around the 62 level. You can see here back over here in June and July, we were trading in this range before we broke out. So the fact that we broke back inside that range, that 65 area, 66 level is going to be as resistance. All right, and we're probably most likely going to get a move back down towards 62, as they're probably going to finish fading it back down towards the bottom of this little channel that we have broke out of here back in July. All right, let's take a look at the IWM here. IWM, the Russell 2000. Russell 2000 still trying to hang in there. You can see how it's at the bottom of this little channel. All right, and we broke below that channel. We got to close below that channel on Thursday. We opened below that channel on Friday, but they rallied it up and closed us right at the channel around the 79.38 level. If I would say if we continue to hold below, say 79.50, and we break below Friday's lows, you can expect us to move here towards 78. If we get back above 79.50 or so, and we start holding back above that, then we want to make sure that we don't get caught in any little snapback rally back up towards the 81 level. All right, just something to keep in perspective. We'll see how the futures trade Sunday overnight, going into Monday morning, and we'll come up with some good strategies to work on the IWM if that's what you like to trade intraday. Let's take a look at the weekly chart of the IWM. I'm doing this one backwards. Let's take a look at the weekly chart of the IWM. You can see here we're below that key 83 level. All right, we're below the 20-day simple and exponential moving average on the weekly. Also the 8 EMA, 8 SMA on the weekly. And if we continue to hold below this 50-day simple moving average on the weekly around the 79.68 level, you could probably expect the IWM, if the markets continue to sell, to move down here towards 76, where we should have some nice support. And then maybe if we break that, towards 74. I may be getting a little bit too ahead of myself, but just some levels to keep into perspective. If we rally back up, you want to be watching the 81.34 level, then the 82, then the 83 area. Okay, let's take a look at the monthly chart. Monthly chart, you can see it. The monthly chart continues to get rejected at this 85 area, like it did back here in 2007, like it did back here in 2011, and like it did again right here in 2012. So what is this telling us? This is telling us a possible, triple top. If you want to use this point, maybe quadruple top in play. We have the steep channel right here. So this is a key channel that we're going to be. This is a key trend line as well that we're going to be watching on the IWM. I would say that I would say that when the IWM breaks this low that we made right here, which I think that's a June low, we break that low, which probably coincide with the break of the 50-day simple moving average and this trend line, then we have something to really worry about. But right now, this could just be a general pullback on the IWM to backtest that channel, or to backtest the bottom of the channel down here towards 72.30, and then we could probably just be in a range between 73 on the IWM and 83. So a lot of things here, but that's more of a general time, a longer time frame. I'm using this monthly chart. You guys know us. We like to take a look at the weeklies and the dailies, obviously, when we're looking at our setups, and then obviously we do our magic on the intraday time frames. That's the IWM. Let's take a look now at just a quick little look at the Dow Jones futures and just a daily chart. You see that we broke the little upper channel. We broke this little pattern right here. We have a little head and shoulders pattern that played out on the Dow Jones. And as long as we continue to hold below 13,000 on the Dow Jones, this pattern should give us a measured move. All right, from 1300 to 1360, down 600 points, back down towards 2400. So the Dow Jones, based on this measured move of this head and shoulders pattern, you can see here, should take us down towards 12,400 if that measured move takes place. So we have about another 363 points to the downside on the Dow. If you're looking for the head and shoulders pattern, well, the head and shoulders pattern is right here. That's your left shoulder. That's your head. This is your right shoulder. Usually on a head and shoulders pattern, the head is usually in a form of the trap. Well, what's a trap? The trap was a Dow Jones trading in this range between 13,271 and this 13.6 high up here. When we broke down, back test to try to get back above that 13,271 level held. That formed our right shoulder, and then we have the crack right here, the crack of 13,000, which has brought in this nice selling pressure. And we welcome the selling pressure. Why? Because it gives opportunities, it gives fear, brings volatility, and we could take longs and take shorts. Anyways, that's a Dow Jones. I'm not going to take a look at the weekly and the monthly chart because I don't even trade the Dow Jones on a daily basis. All right, let's see. Let's take a look at the dollar futures /DX, my platform. Now the dollar futures continues to move higher. This is causing some selling pressure in some commodity stocks and the market. I would have to say that gold is holding up actually pretty well with this increase in the dollar. That's something to keep in to perspective and to write that down in your notes. If the dollar continues to rise higher, we can see some more selling pressure in the markets. The next target on the dollar futures is around this 81.50 level, which should act as resistance, and we'll have to see what happens there. So the dollar still has some more upside, which means the markets probably still have some more downside, which some of the charts obviously are showing us that the markets do still have some downside. So that's something to keep in mind. Let's take a look at the weekly chart of the dollar. And you can see here the weekly chart of the dollar is back at that key level. Why is this a key level? Because you can see here this was a key level that was holding above here in this little range. and 8150 is going to be a key level to watch next week. Take a look at the monthly chart. Highlight the fact how we had this little big bull flag that tried to break on the monthly, trapped some shorts in there, faded right back, and now it's going back up to retest that bottom of the bull flag area around the 8150. Again, that's going to be the key level to watch going forward on the dollar futures, people. Let's take a look at the euro. The euro's telling us some interesting things here. All right, now let me take off my moving average so you guys can see the chart a little bit cleaner here. And you can see here everything that we've been using in our analysis and I have been showing you guys, this has been playing out. Let me zoom in here. Sorry about that. It's been a long day, people. I actually went running on the beach this morning. I went to the gym, grocery shopping. Got to get out, man. You can't just be in front of the screens the whole day during the weekend. I mean, we're in front of the screens Monday through Friday, so it's always good to get out, do some exercise, and hang out with family and friends. So in any case, euro is most likely probably going to get some selling pressure next week if this chart plays out like it should. We had this nice little channel that we basically been highlighting ever since we broke out above this my key red shaded zone right here. Had this nice little bull trap that took place above the top of that little slightly downward channel angle. And now if we break below 127, we should be expecting a nice move towards 126. Now, this is where it's going to be important. 126 on the euro is a key level. Why? If you guys recall, and you guys go back to my videos, you can see how that level was acting as resistance all the way back here, back in March, back in February. You can see how triple top. We actually call this breakdown. If you go back and look at my videos on my YouTube channel, which is Ask Chris He Trades on YouTube. You can see that right there if you go back to those videos that I made back in March. So in any case here, now when we broke above that level, we also called the long to get long the euro above that level. You can see that nice expansion move as we were breaking that key trend line, trend line zone from the channel. We broke down. I mean, we sold off right back down, held this a little higher level. Now we're at a key level where this trend line doesn't hold. All right. Our last line of support on the euro is going to be 126. Now, if we start breaking below 126, that means this was a failed breakout of this above this key trend line, and that would also mean that anybody that bought the euro long above this area right here will be actually caught in a possible bull trap. Now, this is a little bit, this is a little bit some extensive analysis, I guess you can say here, but something that I've been watching. It's been working. And I've been keeping you guys in tune with this. And if you guys go back to the videos, you guys will see how this analysis has been pretty accurate. So I'll keep you guys posted on this going into next week, and we'll go from there. Let's take a look at the GLD now. The GLD day. Let's take a look at the GLD weekly chart. Let's take a look at the monthly chart first. Monthly chart is still looking good, you guys here. Holding the 20-day simple moving average, holding the 20-day exponential moving average, holding the 8 moving averages here on the monthly. So that's looking pretty good. Now let's take a look at the weekly, and the weekly is looking pretty good. Actually, look at the volume that came in gold this week. All right, look how we have this nice little downward channel. And you guys that's been in the chat room, our mywallstreettv.com chat room. And if you want access to that chat room, make sure you go to wallstreettrading.com and fill out that form on the right-hand side. In any case, GLD. All right, have a little downward channel break, rally up into our resistance, pull back on light volume compared to the buying volume that came in. And we got a nice volume bar that came in this week. All right, and it actually held up well if you take a look at some of the intraday action and just basically the whole overall sentiment of what was going on with the market. It held up pretty well. So we're watching gold next week. Let's take a look at the daily chart. Put the moving averages back on here for you guys. You guys can see here. Once we get back above this 50-day simple moving average around 168.50, all right, we're going to be back into game on mode. And really, the daily chart of gold looks real choppy, obviously, because it has a lot of gaps in it. If you take a look at the weekly chart, it kind of cleans up, takes out some of the noise, and you can see how this looks like a legitimate, viable pullback on top of the moving averages, higher low versus the breakout of the channel. So it looks good, guys. Make sure you're watching gold next week if you have not been watching it already. All right, let's take a look at silver, because silver is actually also getting some juice as well. Silver, I want to see the SLV back above 32. If you take a look at the silver futures, though, you can see the silver futures are back above this little resistance level. So I'm looking for silver to move higher next week as well. If the commodities and precious metals move up and we get some selling pressure in the dollar, or even if the dollar still continues to rise up at a slow pace and we see these precious metal stocks hold up. All right, so keep that in mind. Let's take a look at the GDX, The gold miners are still in play in my little downward channel setup here that we have. All right, and then I have it actually shaded for you guys as well. So you can see the GDX is trading in this little range right here, and this is going to do something. And once it either breaks the top of this channel or the bottom of this channel, we'll be able to take some action and come up with some trade ideas. But right now, you can see it's just basically trading in this little channel range. All right. Now some people get confused thinking a channel could obviously only be sideways. All right, and they may say that's not a channel, but guys, that is a channel. It's at a slight little downward angle. All right, if you're an advanced trader, you know that is a channel. And if you don't understand how that could be a channel, well, then you need to go to my website and check out some of the work. And my website is channelguidetrader.com. All right, so in any case, it's a little channel. All right, they bought the bottom of that channel earlier this week. They raised it up. I was expecting GDX to maybe get a nice little positive day on Friday as well, but that faded down a little bit. But we're going to be watching this, guys. What's going to happen is either going to break down and trap everybody that was buying the GDX inside this channel, or it's either going to get a nice little ride to the top of the channel and then break out, and we're going to be off to the races. So I'll keep you guys posted with that. Let's take a look at the weekly chart of the GDX. GDX kind of like a little Bible pullback right here, possibly as well. We'll have to wait and see next week if we can get over this 51.86 area, call it 52. Take a look at the monthly chart. You can see how that 54 level is a key resistance level from the consolidation that we had back here in 2011. From the breakdown, back test did hold, so we'll have to see how this sets up. A lot of opportunities out there, guys. You really want to make sure you're on top of your game so you're not losing money and that you're able to catch some of this market volatility in your favored direction that you're playing. So now the VIX volatility index still holding up above 18, above 17, above these moving averages here. Back test of this little downward channel break, which we called that on that day, the back test or the higher low, did hold right here, and we traded up since. So therefore, the real trigger on the VIX is going to come once we break out above this 1966 level, once we break out above this 20 level. All right. Let's see here. I know I've been going off on a tangent here. Make sure I get you guys the right information. Let's take a look at the banking index, the BKX. Have some channel analysis on this as well. You can see we're right back at this key area from the key channel trend line. All right, you can see how we had this little, I'm not going to go over this. Well, I'll go over it again. You see how we had this nice little high base consolidation. All right, we broke down. The back test held. We sold off. Had this nice little consolidation right here, my little proprietary channel. Called along on the BKX right here. Go back to the video. You can see that. All right, we broke out, and now we're kind of in some trouble here as the BKX, the banking index, is vulnerable for a breakdown if we break below 48 on the BKX and hold below it. All right, because then you can see here, this is kind of the little range that we're trading in. But you can see here, we kind of have like a little head and shoulders pattern on this daily chart. Now, it looks kind of sloppy, but this looks like a little bit of a head and shoulders pattern to me. You have your neckline right here on that key trend line. You have your left shoulder. You have a little spiner top right here, kind of like a little head forming your little right shoulder. If we continue to hold below, I would say 48.84, 49, and we break below 48 and we hold below 48, we have some nice little selling pressure back down towards the 46.73 area, which would be kind of like a little back test of the top of this little channel range right here from this little key trend line that we had before we broke out. And then if the BKX sells off a little bit more and the market sells off some more, and then we try to hold some support on the market, and I see the BKX holding down here, then I'll give the go that we can have some good buying opportunities, some of these banking stocks that have been pulling back. But again, I'll keep you guys posted on that as we need some more time on that right there. Let's see here. Don't want to forget about crude oil /CL. Crude oil downward bullish channel. It's only a matter of time before this breaks this little upward channel. Okay. This is the daily chart, by the way. All right, we are holding this 84 support level. And once we take out this big red bar, this little ugly down day we had on Wednesday, with the high of that bar is 88.80, so call it 89. Once crude oil gets back above 89, which also coincides with this little downward trend line, we should see crude oil start to get a lift back up. All right, once we get above this 88, 89 area. All right, so far it's acting as resistance. You can see some people got giddy this week and try to buy it, but they got smacked right back down. They're not happy campers. Any case, crude oil is starting to stabilize a little bit down here. We'll have to see what happens with that. Need some more time. Take a look at the weekly chart. The weekly chart is setting us up for a big move in the intermediate future, um, in crude oil in the near term, I should say here. You can see that this little big channel shaping up. I would say, sometime in the sometime in the first quarter of next year, we're going to see a big move in crude oil, whether it be to the downside or the upside. This thing's warming up for something, and we'll be on top of it. Make sure you come in and check and check on that with us to see how we trade that crude oil. All right, so that's crude oil. I think I went over everything that I wanted to go over. Let's take a look at some sectors, which I took a look at the BKX sector. Let's take a look at semiconductors to see how the semiconductors are setting up. Semiconductors broke their little downward, a little bullish channel. But again, in a bear market environment, what usually happens, these little downward channels, they do play out. They give you that little pop-up action, but then when they come back to kind of get like the official back test of the high or low, what ends up happening, they actually fall back into that channel, trap some longs up here, break that little low right there, and then fade right back down, and it's just not a good picture. So keep an eye on the semiconductor stocks to see what the semis do, and we'll be keeping an eye on this. Obviously, this semiconductor index, the SOX. Take a look at the weekly chart as well. A nice little triangle. This is going to be giving us a nice little play as well. Come the first quarter of next year, we should be seeing the semiconductor stocks either break this trend line right here, or try to move back up towards the top of this little range up here. But you can see here, this is a big triangle that has been taking shape since this little high right here, where we were able to draw that point back here in early first quarter of 2011. And we're getting near the apex. Now, we still have some more room, but this is telling us something as well, that we're going to be expecting a big move in the semiconductor stocks pretty soon going into the year 2013. A lot of things shaping up, guys, a lot of opportunities, and a lot of money to be made by people that know what they're doing and that are on the right side of the market. So that's about it, guys. Just a little general market overview. If you want to see what stocks we're going to be trading next week, you want to come join us Sunday night at 9:30 p.m. in our chat room. The chat room is mywallstreettv.com. The password to log in is SMART. If you want access to the intraday trading room, make sure you go to the website Wall Street Trading and fill out that form on the right-hand side. If you guys want to see what type of action we do in the trading room, make sure you go to our YouTube channel, My Wall Street TV. Watch our midday market updates, and you can see how we trade the market intraday to the T with some great accurate analysis for our traders and our followers. Thank you very much. Enjoy your weekend. Enjoy Sunday night football. It's 4:21 p.m. in South Florida, and I'm getting ready to get ready and hit the streets, guys. Have a great weekend. God bless.